the majority report. Oh, I'm champing at the bit. This SVB, the Silicon Valley Bank collapse, is such a good example of why deregulation is not healthy for capitalism. The big pitch of neoliberalism is, look, the ultimate way to decide right and wrong is to let businesses do whatever they want, and the less regulation we have on businesses, the happier everyone will be. Of course, that's nonsense. Of course, it's nonsense. And unfortunately, it's nonsense that most of our leaders, if you're in an English-speaking country, most of our leaders have bought into. God help us. This includes centrist Democrats. Bill Clinton, for example, big believer in neoliberalism. Barack Obama, to a degree, big old neoliberal. Joe Biden, interestingly, was massively into this concept. But he is more willing to listen to his constituents, hint, hint, about what you should do in general. And has been going off of that kick. He has finally, it appears, learned. But Silicon Valley Bank received, to sum it up, a break from regulations that had followed the 2008 collapse, where we decided, hey, we need regulations on big banks, and we should put those into law. We did that. We recovered then from that financial collapse, and then in 2018, Trump administration rolled back some of those on the smaller banks. They were still big banks. They just weren't as big as Wells Fargo. Let's have a look at Representative Katie Porter giving us a breakdown of why that was not good for the United States. The collapse of Silicon Valley Bank was totally avoidable. In 2018, Wall Street pushed a deregulation bill that allowed banks like SVB to take reckless risks. It passed. Really want to stress, 2018 Republican-controlled Congress passed that. It passed even as I and many others warned of the risks. I am writing legislation to reverse that law. S2155. So just a heads up, tell you right now, tell your representatives to support this. Link in the description. Okay, I've got to look at this comic. All right. Cut taxes and deregulate Wall Street, says the GOP's long-term plan in this political cartoon. Crash economy. Lose election. Democrats fix economy. Cause gridlock. Win election. Cut taxes and deregulate Wall Street. My God. Well, when you nailed it, you nailed it. Well done. Basking in gratitude. 1776 to 1933. Major bank crisis every 10 years. 1930s. FDR. Bank rules enacted. 1930s through the 1980s. No major crisis. 1980s. The rules are rolled back. Reagan is given 1,000 pats on the back like he's done a good thing. In the 1980s through 2010, major crisis every 10 years. 2010, Dodd-Frank rules enacted. 2010 to 2018, no major crisis. 2018, rules rolled back. 2023, SVB collapses. Perhaps we are in another crisis. Folks, regulation is healthy for capitalism. I want to be on a path where eventually no capitalism. Eventually, there's just this tiny little niche thing that people do, that people who have a ton of energy participate in. And you know what? They live, more luxurious lives. That, long after my grandchildren have been buried, is the society I hope we build. But even if you don't want to go there, even if you want to say, hey, capitalism, through the rest of time, even after we colonize Jupiter or whatever nonsense, whatever we end up doing as a species, even if you're for capitalism for all eternity, regulation is healthy for it. Regulation helps it. Case in point. That is why. It is because without it, capitalism eats itself. Capitalism is a destructive force against itself unless you control it and put in rules that allow for fair play. Don't just take my word for it. There's a gentleman by the name of Sam Cedar who says it quite well.
Let's just start with this clip, and it will help us explain more or less what happened. Understand that federally insured banks, the FDIC is constantly monitoring different banks to see what their exposure is in terms of how much money they have actually literally in the bank, whether they can cover depositors, whether they have leveraged too much of their deposit.
Just to tell you what's going on with the intro, they're talking about, sorry, my mic was off. They're talking about what Republicans said went wrong with SVB. We're going to tell you a little bit about what actually went wrong and what you can do. But we really want to contrast the Republican, the MAGA pitch for what happened here. It's something.
Deposits in terms of loans, and when they think there's a problem, they come in and they shut the bank down. Here is James Comer. He is the Representative James Comer. Is he a chairman of the banking?
He's the chair of the oversight committee.
He's chair of the oversight committee, and he's explaining why the Silicon Valley Bank collapsed. And this is one angle you probably won't hear from most rational human beings.
I get your take on the news of the day, and that is this Silicon Valley Bank loss and this failure. You were on a bank board. You're the chairman of the oversight committee. What should be done here?
Well, look, this is something that I worry could be a trend. Usually when one bank goes down, more banks go down. And what we've seen early on from articles I've read in the Wall Street Journal and other financial publications is they invested a lot of cash that I would assume they had from things like the PPP loan, government policy, and they invested it in bonds. And then because the Democrats spent too much money in all their stimulus, the bonds go down when interest rates go up. The Fed had to raise interest rates to combat the Democrat inflation. And then we see now coming out that they were one of the most woke banks in their quest for the ESG type policy and investing. This could be a trend, and there are consequences for bad Democrat policy. And I think we need to keep an eye on all the banking sector right now.
Well, we're waiting for a solution. We are expecting.
I mean,
that's all they've got.
I mean, I wonder if there's anybody out there anyways who could like really understand what he was talking about. I mean, I get what he's saying. But he's trying to blame so much of it on Democrats and things like COVID relief that caused inflation, which didn't really cause inflation. And that caused the Fed to raise its interest rates, which has a unique impact in some respects.
Do remember, just as they're frustrated over this, remember that the point is not to present a tangible case to their audience. Their point is just to tell their audience, look, there's a Republican retort for this. You won't understand it, but you don't have to understand the other thing. Your job is to agree with Republicans and not try to figure out what's going on with this. That's all they're trying to do. So my point is, they don't need a very strong pitch. That said, what they're underestimating is how many Americans are becoming genuinely interested in solving these problems.
Out on Silicon Valley, because when so many of these companies, and we've talked about this as to why they have been laying off a lot of people as interest rates go up, they don't have much cash coming in relative to the size of their companies. A lot of these companies stay afloat through low cost loans. A lot of them are startups, and they're just trying to increase their valuations so that somebody comes along and buys them out. But when the cost of money, when the interest rate goes up, that becomes harder to do. So they start to lay off people. And the Silicon Valley Bank was particularly susceptible to this. And they were issuing a lot of loans, and then a lot of the so-called small businesses that had their that had all their money there above the threshold of the $250,000 in which the FDIC insures for each depositor. Something like 90% of their deposits were above this. And what was happening is at one point, like, a lot of these companies need to come in and get cash because their loans are too expensive. Maybe they can't cover payroll or something to that effect. Meanwhile, this bank is overexposed because a lot of the interest rates go up. And there was another issue as to why they were able to avoid regulators seeing that they were the relationship between how much they.
I love Sam Cedar. I love that. I love his flow. For the sake of this show, I may clip this up a bit in the future. He's getting into it now. There's another issue as to why regulators were not watching SVB as closely as they could and should have. Here it is.
Had in the bank, and the loans that they had out there was so out of whack. There's a reason. Supposedly they have about $200 billion in assets in this bank. In 2017, they would have gotten a lot of scrutiny for every dollar, or once they passed a $50 billion threshold. But because of a bill pushed by Crapo from Delaware, right?
Yeah.
Is that where you're from? The banker.
Idaho.
Idaho? Sorry. From Crapo, and frankly, I mean, Democrats were on board with this as well.
50
Chris Coons was
Republicans.
there for it.
Yeah, 50 Republicans voted for it. 17 Democrats.
Right.
Voted
All
for
of
it.
the corporate, like, guys like Coons and Warner,
Yeah,
and,
Warner, right.
and Tester, all the people getting the money. And here's Donald Trump announcing the rollback of Dodd-Frank. Essentially, it wasn't a rollback, but it was changing the threshold in which the Dodd-Frank regulations, in particularly in terms of like your deposits to loan ratio.
Telling you how you can use this upcoming clip, and I've put the clip to the majority report in the description. I think you're gonna go grab a chunk of something. It may as well provide a view to a channel, which it would be good to boost in the old algorithm. But show this part of the clip provided in the description to MAGA folks when they come at you with why, if they dare come at you with why they think SVB went down. Because here's Donald Trump doing it.
Was essentially
causing the problem.
Increased by like 5 times. So
5 times.
50
to 250.
And that's why, yeah, explicitly lobbied for by the CEO of this bank, SVB.
We've done. But we've kept yet another promise as I signed the Economic Growth, Regulatory Relief, and Consumer Protection Act into law. It's a big deal. It's a big deal for our country.
Pause it for 1 second. You know, you forget, but like, what the heck? Like, can't they just even put makeup on his eyes?
You don't understand. You've never been in a tanning bed before. Regretfully, I have. You have to put those little things on, and so that is just.
But can't they then just put makeup on his eyes afterwards? I mean, come on,
it's hard to match.
That's very
eyebrows in a very natural way that has been unable to be reproduced by makeup. So
this is
sorry.
2018, and you can look at Mike Pence so longingly looking at him.
Yeah.
Who would know that 5 years later he would have to turn on this one, and this great man.
This is truly a great day for America and a great day for American workers and small businesses all throughout the nation. The legislation I'm signing today rolls back the crippling Dodd-Frank regulations that are crushing community banks and credit unions nationwide. They were in such trouble. One size fits all. Those rules just don't work. And community banks and credit unions should be regulated the same way. And you have to really look at this. They should be regulated the same way,
lost.
with proviso for safety, as in the past when they were vibrant and strong. But they shouldn't be regulated the same way as the large, complex.
We're so
All right,
small.
let me just explain what just happened there. He got lost where he was reading, and he said they should be regulated the same way, when in fact the law that pushed there said they shouldn't be regulated in the same way, because, and he had to do that whole thing. So all of that was just muckety-muck. You have to understand that basically he's just saying they shouldn't be regulated in the same way, because what's the possible danger? Go ahead.
Financial institutions, and that's what happened, and they were being put out of business one by one, and they weren't lending. Since its passage in 2010, Dodd-Frank has dealt a huge blow to community banking. As a candidate, I pledged that we would rescue these community banks from Dodd-Frank, the disaster of Dodd-Frank, and now we are
Bear in mind, the economic recovery that happened following the financial collapse, the stability of the banks that followed, is largely thanks to Dodd-Frank. Dodd-Frank made illegal the betting on tranches that and a ton of other things that made the financial collapse possible in 2008. He's talking about rescuing America from that. Frickin' Pence is giving the googly eyes. He's giving Trump the bedroom eyes over that, rolling that back. Ridiculous.
keeping that commitment, and all of the people with me are keeping that commitment.
Yeah. Well, community banking, like these are not small mom and pop banks. These are banks with up to $250 billion in assets.
Emma Vigeland, folks. Hell yeah.
And like now, we're so small. We're just, helping out in our little regional areas. But now we're too small to be regulated, but we're also too big to fail. So please give us government money now.
And to be clear, supposedly the story is that shareholders and the bank itself is going to take a bath on this, but it's protecting depositors. But there's been some reporting to this effect, and I have a feeling this is going to be the big story, is that two things were going on with this point. Silicon Valley Bank. One, you open up an account there, you've got a startup, you need a very low-cost loan. The bank says, sure, we're going to give you, or here's the deal. If you have X amount of dollars in this bank, we will give you a low-cost loan.
In other words, take a risk, which is defined by your ability to be harmed if things go wrong, and get this reward.
And I have a feeling that this was not just the case for these small businesses, in quotes, but also the individuals. You put $500,000 in our bank and you park it here. This is the way it works, like for bankers, for normal stuff. Like if you.
Okay, hold up. So when we say the difference between small, big, and massive, that's what we're talking about. So when these banks are being called, we're community banks, they're still talking about, opening up accounts with more than $250,000 in them. Does that really seem like a little niche community bank to you? I'll grant there's some businesses that run off of $700 or whatever $1,000, but surely you would then get multiple bank accounts. Hence, every inch of that would be insured by the federal government. So why would you put all your eggs in one basket? Incentive. incentive, hence the accepting of a risk in exchange for something, is the point.
Put in, if you keep, $1,000 in your checking account, you're going to get a toaster, or you're going to get we're going to waive fees on your checks or something like that. There's a dynamic that exists. That same dynamic exists in this big dollar figure. Put $500,000 in our bank, and your mortgage, the prevailing mortgage rate's 3.5. You're going to get a 1% mortgage.
So without playing the rest of the clip, all of it is gold. Link is in the description. Anytime the majority reports on, folks, I got to recommend it. No notes. That said, I do have what you can do about it. Not terribly difficult. Contact your representative. Tell them you expect them to support Katie Porter's SV 2155. The way I've put it in the description makes it even it's more simple than that, so that your congressperson doesn't have the opportunity to wiggle out of it. Tell your representatives in the U.S. Congress that you expect them to support Porter's repeal of 2018 banking deregulation. The point here is to make sure that your representative knows that the jig is up. I hope that's not a racism. I don't know what a jig is. If it's an offensive thing, I do apologize. That they know that they can't get away with the nonsense they used to. I have in my state 2 Democrats, I believe, that voted in favor of this. So I'm going to be writing them to make it crystal clear that I know that banking deregulation is bad and causes these problems. And no matter how much those banks pay the politician, it's not going to be worth it to me that these deregulations go on as they have. So banking regulations are important. It is healthy for the banks themselves. I will point out, as they said, SVB lobbied for the very deregulations that caused their collapse over the weekend. Capitalism requires regulation to work. It is in capitalism's disinterest. It is to capitalism's detriment that major companies are able to lobby the way they are right now. Tell your representatives, link in the description to find out who that is. Tell your representatives in the U.S. Congress that you expect them to support the repeal 2018 banking deregulation. God help us that they need to be looked after the way they are, but they do.